Okay, this is the chapter 7 about accounting information systems. So basically in this chapter we are going to learn about how accounting information is very flexible and following the advancement and changes in the business environment. Okay, so accounting information system, or we call it as AIS, collect and process data from transactions and events, organize them in useful reports, and communicate results to decision makers. And then this the principle in accounting system, there are 5 things. They are control, relevance, compatibility, flexibility, and cost benefit principle. These 5 things, you can find their definition in your textbook. So I'm going just to proceed to this part, the components of accounting systems. So this is the component of accounting system. So basically this is like source of documents, input, processor, and storage, and output. Okay, so firstly before you input the information, you need to have a source of documents. Okay, source of documents can be variative, can be invoice, can be the payroll slip of your employees, or electricity bills, and so on and so on. It can be anything as the transaction evidence. So in this age, the source of documents can be paperless. So all documents now can be found as digital. Yeah. And then after we have the source document, we're gonna input the data from the document. So the input devices, the examples can be keyboards, scanners, modems, and barcode reader. So so this is, you see, this is an accountant here, okay, or the bookkeeper or cashier. It's up to you what you call them. And then you have the source of document, and she gonna take the data from this document into the computer. So the devices that can record the information or the data from the documents are keyboards, right? So if you do not have keyboards, you cannot input the information from here to the computer. Or you can have scanners. Okay, like you scan the data. For example, in the documents they have the QR code, and you have the scanners. You just scan the QR code on the documents, and the information is already recorded into your computer, already inputted into your computer. So these are the examples of the input devices. After you input the data, okay, and then you need to input the data in, you need to process the data into information. Okay, the examples of information processor can be hardware, software, and the professional judgment. Okay, hardware is the thing that you can see. For example, this is computer or laptop, so something that you can touch here in these devices, you call it as hardware. Okay, so for example, in the computer, what is the information processor there? What is the hardware? Okay, the hardware is the CPU. Okay, so and then the software is the software, the application, the apps in the computer. And then professional judgment, we can call it as the brainware. This is the not the user, the one who the person who process or who operate the processor here. Okay, so they need to have the professional judgment, okay, when they process the information. And then after you process the information, you can store the information, you can keep or you can save the information. And then the example of the information storage can be CD, DVD, hard drive, tape, and paper document. The other information storage can be anything that can save or store your information. It includes iCloud or Google Drive. Okay, and sometimes after you save, you need to present to people, then you call it as output. Okay, so when you present to people, you can use printer. You print the document, you print the information, you print the report, or you can have the monitor. Okay, people can see your presentation, can see your output from the monitor, or you use projectors. You have a large amount of audience. Okay, so you need projectors or web communications such as Skype or Google Meet or Microsoft Teams. That is the web communications. So these are the components of accounting systems. Yeah, so as I mentioned before that accounting information is very flexible, so they have to follow the technology, the advancement or the need of people. So the journal, we know that journals, before we only know general journal, right? Like you have that something here, the account, debit and credit, and this is the number. This is general journal that we learned in the previous chapters. But time by time, people need more specific information in accounting. That's why we have other journals. Yeah, we call it as special journals. So in special journals, there are 4 special journals. We have sales journals, cash receipt journals, purchase journals, and cash disbursement journal. Okay, I repeat, previous chapters we only learn about general journal, but now we go into more specific. So we have special journals. There are 4 special journals: sales journal, cash receipt journal, purchase journal, and cash disbursement journal. Okay, and in the previous chapters also we only know about general ledger, or what we call that ST account. Now we have this subsidiary ledger. Okay, so there are only 2 subsidiary ledger. They are account receivable ledger and accounts payable ledger. Okay, so